Hey, good evening. I'm Dan Fitzpatrick here at stockmarketmentor.com, and it's Thursday, December 11th. I want to look at FedEx. I've got this snapped in between a bunch of Bollinger Bands here. One standard deviation and two standard deviations. When a stock is trending higher, you're typically going to see it trading within this range, like in between the 20-day moving average and then the second standard deviation Bollinger Band. What you really want to look at, one way that you can kind of assess the trend, there's a bunch of them, and they're all pointed to the same thing. Is the stock going up or down? And how likely is it to stay that way? You want to look and see where's the stock trading. Here, it's tended to trade in between the first and second standard deviation. Okay? Trend is up. The trend is up. But it's hard to buy. It's hard to buy the stock when it's in between this first and second standard deviations. It's kind of like the strongest time, strongest period for the stock. Just like it was hard to buy here. Okay? But then ultimately, here's the point. It's hard to buy. Why? Because you're afraid that the stock's going to peak. But ultimately, the stock will drift sideways. Even a nice uptrending stock at some point is going to start drifting sideways and give you a better opportunity to buy the stock. So you don't have to worry so much about buying at the high. Okay, what I'm saying here is the stock's been really choppy. We've had a lot of fuel issues, energy, oil, all of that kind of stuff. And so I'm looking at this now after 3 down days. Monday, Tuesday, Wednesday, and then today being Thursday, also really being a down day. It was up, 42 cents, but look where it opened. It gapped up along with so many other stocks and then traded lower. So what I'm suggesting though is right now, if you're looking to get into FedEx, this is about probably as good an entry as you're going to get on a shorter term time frame. Now you look at the stock, it's been trading up here, it seems like it's going up forever. It is definitely overextended. Bearish engulfing pattern here. That means the stock is, let me get the right tool for the right job. Okay, the stock is gapped up above this last bar's high. And it's now trading down below this last bar's, not intra-period or intra-week low, but at least where it opened up. So it's engulfing the box. It's engulfing the box here. It's not yet down below last week's entire trading range. Not quite yet. Looks like it could be going there. So, you may get a steeper correction. Let me get back to a better chart. You may get a steeper correction on this weekly chart or not. What I would suggest doing is, if you tend to be a shorter term trader, you look at buying some of this stock right here at the 20-day moving average, a little bit of stock, not the perfect entry. The perfect entry, at least in this chart, has been like the 50-day moving average. So that's about 10%, not 10%, about 5%, not even 5% below where the stock is now. But you take some stock here because you're nodding to the gods of Wall Street that this stock is trending higher and you don't want to buy it up too high, so you're definitely buying it off the highs a little bit, but then you also give a nod to the gods on the weekly chart and say, if the stock goes lower, I don't want to be holding a big slug of it, and so I'll take a little bit now, and then if the stock pulls back 170, 171, then I'll consider adding more. So that's how I would look to trade FedEx. Members, get over to the strategy session. I got there's a few stocks that I'm kind of pounding the table on saying you want to buy right now. So why don't you go over there right now?